At the moment, we think that inflation is still probably edges, if you like, that concern around the growth outlook and the labor market, because the labor market is performing. So it's kind of favoring that sort of soft landing view, if you like. And therefore, the question is the inflation dynamic giving them enough reassurance that inflation is heading in the right direction? And of course, what we got yesterday, it was reassuring when you look at the sort of the core reading in particular, suggesting that we should get a pretty benign PCE. But the details are still a little bit concerning. You know, the core goods inflation is ticking a little bit higher. And history shows you that core goods inflation tends to lead services inflation. And of course, if you think that tariffs are coming, you know, that means that goods inflation is likely to get a leg up. So in that sense, we think that at least near term, it favors the view that the Fed should actually wait and see how things play out in terms of knowing what the Trump administration has in mind, in terms of more data reassuring that the downtrend in inflation is continuing, but perhaps a little bit more gradually. And therefore, our sense is that at least over the next 3 to 6 months, we favor the Fed to pause. But that the dynamics will be there for the Fed to look at easing again towards the middle of the year.
And Rodrigo, over the last 24 hours from Jakarta to Seoul, we've had surprises from the BI and the BOK. I mean, how does that set us up for next week with regards to what you're expecting from the BOJ, which will be, I suppose, the next cab off the rank, particularly given the signalling we're starting to see gaining traction now about that meeting?
At the moment, the BOJ has made it very clear that unless we get a negative surprise, if you like, coming from President Trump's inauguration speech and new policy announcements, then we should actually be lining up for a hike in next Friday. I think that the other important aspect of that will be the forecast and the guidance. Are we heading towards 0.5 in terms of policy rate, or are we heading towards that 1%? And that will be super important in terms of, whether the recent yen strength that we're seeing can actually extend and whether we see a break below $115 yen.
Okay. What did you make of the BOK's decision today, Rodrigo, and the won's reaction, which actually has been subdued, I'd reckon, obviously because they kept the rates unchanged? It would have perhaps been weaker had they gone ahead and cut rates as the market expected. But what does this mean for the path ahead as far as rate policy is concerned by the Bank of Korea?
Well, we tend to look at EM Asia broadly, and our sense is that many central banks are conscious of what is going on with the dollar. The dollar and the strength in the dollar it means that global financial conditions are tightening. So in many ways, you need to be mindful of that. And if you ease in that environment, your inflation dynamics, are not very helpful. So I think that like in many parts of the world, including here in Australia, we are watching very carefully what the Trump administration is going to do and the implications it has for the US dollar and how it could fit in terms of the domestic economy. So pausing and waiting to see at the moment seems to be sort of a good move, if you like, because of the known unknown, and we still don't know how it's going to play out.